Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. Now we're going to talk about using ETFs to hedge market exposure in this volatile market with our ETF strategist, Eric Dutram from Zacks.com. So we're coming up to May. We're sitting here on the last day of April, and you know I have to quote that old adage, sell in May and go away. It's on everybody's lips, you know, as we start the month of May. But while it's popular, is that going to be the case this year?
You know, it could be the case.
Or have they sold in April?
Well, it seems like the sell in May has started a little early this year, if anything.
Yeah.
And it's kind of coinciding with some trends that we've seen over a long-term period for the whole sell in May and go away theory.
Right. Just said nothing rhymes with April.
Exactly. That's also part of the problem. But from May to October, that period actually underperforms the rest of the year by about 3.4%, at least when we're looking at the Dow. Mm-hmm. And in midterm election years, which is what we find ourselves in this year, it's about 300 basis points for that time period too. And you know, we also have these other issues to look at. We got some Fed uncertainty, so-so earnings season, and you know, as you mentioned, a pretty choppy start to the year. So all these events could coincide, and we could see another, you know, very volatile next, you know, summer season here, and it could lead to some more you know, weak trading, a lot of big equities, and it could be time to look at some hedging strategies for a part of your portfolio.
All right, so with that as the backdrop, you say there are ETFs out there that investors can use to hedge exposure.
That's right. There's actually close to 150 inverse or leveraged inverse products out there. Obviously, that's a ton, and there's plenty that either do double or triple leverage, but there's also some single inverse funds, which just seek to give you the opposite performance of a benchmark over usually a single day.
Okay.
And a lot of investors don't really consider these products because they're big fans of the, you know, kind of the big bang for your buck products like TZA or TNA, where it's, you know, you get a big move in a short time period. But if you're looking for a little less volatility and you just kind of want a little bit of a hedge, some of these 1X products might be a better bet for investors out there.
I'm still trying to get my head around TMZ, but it has nothing to do with this conversation. So first you want to share with us one that offers maybe some short exposure to the S&P 500.
Right. If you're just looking for a broad play against the S&P 500, we've got SH from ProShares. This is a very popular fund. Almost 3.3 million shares trade every day, so it's a pretty liquid product here. A little bit pricey, almost about 1% a year in fees. But you know, once again, it's going to be a great play if you just want to, you know, take some exposure off the table and go against some of the broad stocks. You know, you got Apple, ExxonMobil, you know, all the large cap names that we're all very familiar with.
All right, then there's one that is a small cap focused short play.
That's right. Obviously, over the last couple of weeks here, small caps have been among the most, you know, hard hit stocks. So if you're looking to kind of play off that trend, see that this is going to continue. This RWM product could be a great way to go. It follows the inverse of the Russell 2000 index.
Okay.
Once again, it's a little on the pricey side, at least compared to some of the more traditional funds out there, but great volume here as well.
All right, and then lastly, one for the in focus NASDAQ.
That's right. Once again, from ProShares here, we got PSQ, and this fund follows the inverse of the NASDAQ 100 index. And you know, we've seen a lot of weakness in a lot of the biotechs, big social names, and the NASDAQ index. And so if you're looking to kind of, you know, see this trend continue, this is another popular way that you can do it. And once again, without some of the, you know, triple or double leverage that a lot of investors seem to like. Is
there anything else about the inverse ETF market that investors need to know right now?
Definitely. All these three products, they all rebalance on a daily basis. So what that basically means is longer term performances might not coincide with what you think because you're getting this daily resetting factor. So it's just important to remember the benchmark is only looking to give you the inverse performance of a single trading day and not really anything longer. So if it doesn't really match up with what you might be thinking, that's really the case. It's definitely something important to keep in mind. And this is a issue that does impact all inverse and leverage funds, especially in trending markets.
Okay. I have to rebalance periodically, but it's because of some vertigo that I suffer from. I'm old. Anyway, do you have an investment interest in any of these that you mentioned?
I do not.
All right. Check out some other ETF information, whether it's education, whether it's commentary, or interesting articles about specific ETFs in specific sectors. You can find it all at the ETF section of Zacks.com. And you can link to it right off the homepage if you're not there already watching this video. With Eric, I'm Terry Ruffalo.